In our trader rundown today, Mark Sebastian is at the ready, here to talk about this rotation that's been happening in the market. So explain what's going on here, because I think a lot of people might wonder why this is happening.
Well, I think it starts with the fact that this administration, from a policy standpoint, is the polar opposite of the outgoing administration. What was the outgoing administration good for? Good for Silicon Valley tech, really good for hospital conglomerates.
Healthcare stocks.
But what was it bad for? Biotech. Not as great for the financials. And really, I think this all comes down, especially with the financials, the fact that the belief is we're replacing monetary policy with fiscal policy. And the last 7 years, the economy has really been relying on monetary policy. You add interest rates back, real interest rates back into the financial model, their value starts to change. Meanwhile, tech, I feel like that was a little bit of a knee-jerk reaction.
That's going on right now. So much money came out of Facebook.
So much money came out of Facebook and Apple and Amazon and Google.
It was sudden.
Like that. And then money just ran into biotech and JP Morgan. Probably overshot the target a little bit. We're going to see a little mean reversion. Also, we might see some new money come back into the market. Remember, we've seen months and months of net outflows.
Well, people didn't know what was going to happen with the election. There was a lot of uncertainty for a very long time.
Right. And having the election certainty, and now what appears to be interest rate certainty, we may actually see money coming back in the market, which means, yes, we see the Russell 2000 outperform and the financials outperform, but maybe all that means is tech doesn't continue to be the crazy outperformer that it was the previous 18 months. Although my personal belief is Facebook will still end up being the most valuable company in the world sometime in the next 15 to 18 months.
What would be your play? What would be a trade right now on the market?
Near term, I still think that there's some recalibration left. Back toward the mean. I like being long the NDX. I like being long Apple, Amazon, and Facebook and Google. All the FANG stocks plus Apple, minus Netflix. I just don't trust Netflix. That's why us traders call it the Widowmaker.
Why do you guys not trust Netflix?
Because I don't know why it gets grouped with those other names. It doesn't belong there. It should really be FANG as opposed to FANG. But FANG sounds nicer. I like those names to move higher. I think I'm going to watch for financials and the Russell 2000 to pull back, and then I'm going to look to get them into them as longer term plays. I think we said this last week. Goldman Sachs back above 200, JP Morgan back toward 80. I like Goldman and JP Morgan in the next year to maybe make a run at their all-time highs.
Here's another question, though. For the average Joe, should the average Joe be trading this market, investing in this market? What do you think? You've seen this rodeo before, as they say.
If the average Joe, I would be looking at the next year as a time to allocate more toward financials and U.S. Russell 2000. And maybe a little bit away from the S&P 500. The S&P 500 has been so dominated by its really top 15, 20 stocks that make up that with this kind of America First out of the Trump campaign, the Russell 2000, which is also heavily financial, could lead over the next year or so. So I might look at adjusting my allocation.
Thank you for your Trader Talk today.
Thank you for having me.